Morning, gentlemen. Thanks for joining in. Deven, your first reaction to the ONGC numbers and how you see the stock reacting this morning?
Yeah, good morning, Vivian. Well, indeed disappointing actually. I think if one wants to look at the numbers, probably if one can see the gross realization and the net realization that they have made and the subsidy burden that they have to absorb between the two, I think it's suggesting that analysts are going nowhere in putting across their estimates on this particular stock, because the government who is taking the call on a quarter-over-quarter basis as to what should be the subsidy burden. So really disappointing kind of a numbers. In my viewpoint, Udayan, I think one can't be taking any serious call on this kind of a company, because tomorrow morning again government will come up and say that okay, we have now revised the subsidy downwards, and everybody would start working the numbers on the upside. So to an extent, I think the stock would naturally react on the downside today, but any serious money would go into this kind of a company. I think I'm not too sure. At least I think from our side, I think we have been refusing to put money into the PSUs, particularly I think the downstreams and the upstreams in ONGC now.
What has been the stand-up from infrastructure for you this quarter, Deven?
Well, I think if you actually look at, I think some of the companies which have come out with results, probably I think what is more reassuring is that I think coming out from companies like Larsen, and to a greater extent I think people like Voltas also have been talking on the same lines, that they are having a good amount of business to execute, and it's despite of the kind of a slowdown in project execution that they are seeing from the client side, they still find that a good amount of business is already happening. So that's a reassuring kind of a sentiment that I would call it, I think, from this particular space, and that gives you the larger amount of confidence that yes, I think some of the capital goods companies probably I think would continue to progress well. Proxy to infrastructure in the form of banks and large size banks would continue to have larger amount of lending also continuing in this particular space. What is more worrying is that I think core infrastructure executions of some of the construction companies, and they are taking a bad hit. In fact, I think IVRCL management yesterday was on record saying that how much revenue they have lost because of the non-clearance of the project. So to a greater extent, I think that remains a little bit worrisome. Whether I think this will continue for a longer period of time, it would start affecting some of the capital goods companies eventually, not too sure. But as of now, it appears that I think some of the strong capital goods companies with a good order book, particularly with the private sector and a pass-through clause built into their contracts, are reasonably well placed, I think, as far as I think their investment horizon is concerned.
Deven, what do you do with some of these autos now? M&M and Tata Motors both fell 5% after their results. Is the damage priced in, or do you expect these stocks to underperform even from here?
Well, I think to a greater extent, I think I would say that the stocks have reacted kind of on an anticipation kind of a thing for the lower volume which is expected in the first half of this financial year from most of the auto companies, given the tightening situation that they have operated. So to a greater extent, I think you are going to see the price already factoring into it. But suppose if some further negative comes out in forms of monthly numbers, then you could possibly see even larger fall. I'm not too sure about, I think, Tata Motors meeting that kind of a fate as far as fall is concerned, because they already have the commercial vehicle segment doing quite well, and in these months I think they have been actually I think having good amount of pickup in commercial vehicle segments. The car segment is known segment, I think, where their domestic portfolio is not growing, but the JLR portfolio is giving them a steady balance on that particular front. So as long as Euro stays a little bit comfortable, and probably I think you would see a higher amount of flows coming in from JLR, in my viewpoint I think Tata Motors would be I think comparatively better compared to others. Others may have some amount of downside left on the correction, at least if not more, at least for this first 6 months of this financial year. And the valuation wise, if you look at it, Tata Motors also gives you downside margin of safety because of the valuation sub 7 kind of a P under which it is quoting. So to a greater extent, I think that is giving you comfort level. In other stocks, I think there may be some scope of the adjustment on the downside. So you may see some fall in some of the other auto companies.